Good morning and welcome to Unusual Activity, powered by FinancialJuice.com with George Avedon and Milton Marmonides, with special guest John Clayburg, who will be joining us in just about, say, 10, 12 minutes or so. Folks, lots happening in the marketplace. There's been various headlines affecting markets, and we've seen some gyrations, specifically in the in currencies, in futures. So that's going to continue in terms of, we'll jump into these in a few moments, the geopolitical tensions, if you will, coming out of Ukraine, geopolitical tensions coming out of in the European Union, certainly, with Greece, and the drama that continues. Certainly comments out of Germany this morning has sent markets, continued volatility in the markets with those headlines. So let's jump into the numbers this morning, what we're seeing in initial indicators here. Let's take a look at the ES. We've been mentioning the ES for, we always mention the ES. The S&P 500 futures are lower by about a little over 5 handles now, at 2090.5. We have crude oil now, rather large decline here in the morning, in the early morning hours here, down by $2.67, down to that 50 handle again at $50.17 now. Looking to see if that 49 is that 49 handle is in the making. So also, gold higher by $14 today, $14.30 to be specific, at $1,214.50. We have the 10-year at 2.087%, rather significant increase over the last week or so in the 10-year. Also the 30-year at 2.709, and the 5-year here, folks, at 1.550. Remember, about a month and a half ago, 2 months, we were at that 1.66 level. We dipped in yield significantly at that 1.2, 1.3 area, and here we are coming back. The dollar strength continues this morning at 94.374. The yen, the euro at 1.1370, and we'll continue to monitor that. That's one of our central themes that we are keeping an eye on, and we'll get into the themes in just a moment. So one of the things that we'd like to do is, on a morning, every morning, we'd like to take a look at quickly yesterday's trading. The Dow Jones Industrial Average lower by 0.10% at 18,029.85. S&P 500 down by, let's call it more or less flat, 0.03% at 2099.68. NASDAQ higher by 0.14% at 4906.35. Certainly taking a look at volatility, we were relatively, let's call it about an 8-point range yesterday in the SPX, finished towards near the flat line, towards the high of the day in the SPX. So we'll continue to see, clearly we're influenced by global politics, macroeconomics. Again, keeping in mind on the Asia side, there is the Lunar New Year being celebrated. So that's certainly getting that into the equation there. Taking a look at in terms of, we mentioned geopolitical events around, so also keeping an eye on the Middle East, specifically with ISIL. Certainly, there have been a plethora of various headlines being passed around over the last few, over a week or so, with violence and so forth. Always interesting to see, certainly over the last few days, with counter-terrorism efforts, global counter-terror efforts being announced. So that's, again, adds interesting dynamic to the equation there. Saudi Arabia, OPEC, as oil continues its volatility here, specifically within the last 4 days, that range of volatility, keeping an eye on that. And if there's any specific commentary out of Saudi Arabia and OPEC with respect to that, so keeping an eye on that. So we're getting, so we'll continue to receive throughout the day various headlines to do with Greece. And we know that this morning Germany basically came out and said, we don't agree to the bailout extensions, and certainly before that, the European Commission, the finance arm, said that possibly we could see some workable arrangement. But again, all of these headlines certainly affecting volatility. A few headlines coming out here, a little bit more here. Italy economy minister says if a country left the euro, it would transform single currency into a system which it can be undone. So again, this notion of the Grexit, we've talked about this. It seemed to have disappeared for at least a little bit of time, as Tsipras and Varoufakis have made their rounds, if you will, to speaking with various officials in the EU. But it seems to have resurfaced, at least for the short term, in discussing these bailouts and arrangements. And again, we feel until that there's a moment that there's a clear indication of agreement, this notion of the drama will continue. A bit of crude oil headlines here. Crude oil weakness on the back of large API build numbers yesterday at the close. Certainly we see that crude coming off quite a bit here this morning. So let's get into some of the economic numbers. An index we watch on a daily basis is the Baltic Dry Index. We did have a bit of a rise of 0.4% to 511 points. And folks, if you don't watch this index, we highly recommend this. Perhaps not even to trade off of it, but to at the very least to keep an eye on it. And this is the index that tracks container ship activity with respect to raw materials such as grains and other raw materials. So this is almost a leading indicator, if you will, of activity specifically on container ships, and this is global, folks. Initial jobless claims this morning, 283,000. Survey was 290,000. Prior was 304,000. Continuing claims 2.425 million. Expected 2.3 million. Philadelphia Fed survey at 10 o'clock we're anticipating. Leading indicators also at 10 o'clock. EIA natural gas reporting at 10:30. And also the petroleum status reports at 11. So we have a lot of information that's coming through this morning, which will no doubt affect volatility, whether it's drawdowns or builds. So again, really important to monitor all of this and the effect it has on specifically natural gas and oil. We see that natural gas is now at higher by 0.005 at 2.833, and the reason we bring that up is that as of late, last few days, there was various headlines referring to a rather severe Arctic or polar vortex that may impact it may impact natural gas prices and heating oil numbers. So again, keeping an eye on that. Again, natural gas at 2.835, and again, oil currently at $50.30. Waiting those numbers in a few hours here. So themes for the day, folks: continued volatility in the euro, continued U.S. dollar strength. Oil volatility, obviously, the fact that we have numbers coming out this morning, it certainly will throw a little bit of proverbial fuel on the fire. As we listen to analysts, central bankers, economists, we listen for daily any indication of the deflation risk. Sometimes it's referred to as lower inflation expectations, and that's something that we're keeping an eye on. Certainly the Treasury yield curve, folks, very important here, and we'll get into that in just a few moments. Russian economy, as long as inconsistencies are coming out of Ukraine and Russia, one side blaming the other for possible ceasefire violations, we're going to continue to see this odd situation that's coming out of there. Certainly Russia's economy is of concern, obviously. We have certainly the Russian ruble, and also more specific is, as this fighting continues and should the ceasefire not work, what's the response of Russia to the EU countries, and what we've been talking about is their relationship with China specifically. Certainly we're coming towards the end of earnings season. We'll continue to monitor that situation as well. So what we'd like to do is let's take a look at in oil specifically. We like to bring these up, and these are various comments that we like to keep up just to keep people honest, as we have commentary coming in from just about everywhere. We like to track that. So at the very top of your screen, we have oil names, ETFs, ETNs that we like to keep an eye on, and that is, specifically take a look at the OIH, the underlying names in oil. How do they trade with respect to oil's volatility? Some of these ETFs, ETNs are bullish, bearish. Some have 2-3 times volatility. So again, and one of the other things that we'd like to keep an eye on is the fact that as long as oil maintains its lower price, what the impact of is on producers, impact on CPI, PPI numbers, and that's really important here, folks. Also, again, some comments from some time ago. Secretary Lew doesn't expect U.S. crude production to decline. Goldman Sachs Cohen, oil prices may hit 30. We had Citibank commenting that 20 may be a target. And then certainly on CNBC, Jim Cramer commenting, quote unquote, it's kind of done. I think this is where you buy it. And that was around that 46, 48 mark. And again, we like to keep people honest here and keeping an eye on oil here. We'll take a peek at commodities, raw materials, energy market once again here. So again, crude oil at $50.17, gasoline lower by 0.0529 at 1.5211. Natural gas, again, we're looking for it. See if the natural gas can creep up to that $3 mark. Currently at 2.8333, higher by 0.002. Heating oil lower by 0.0295 at 1.9299. Gold at higher by $13.40 at $1,213.30. Silver maintaining that below 17 level, higher by 0.325 at $16.59. And platinum is higher by $2.90 at 1170.3. Again, larger stories here. We want to keep an eye on this Treasury yield as compared to about a year ago or so, and that's something that we'll continue to monitor. Folks, without further ado, we are so glad to have with us this morning John Clayburg with us. John, good morning. Thank you for joining us this morning.
Well, good morning, everyone. Pleased to be a part of your presentation. I haven't just got familiar with your site, but it's pretty interesting the way things look.
Awesome. No, we are very glad to have you on. John, please take some time and introduce yourself. Give us a little bit of background on what you do, and then we'll jump into what's interesting to you coming into this market this morning.
Well, thank you, George. My name's John Clayburg. I graduated from Iowa State University in 1971, degree in doctor in veterinary medicine, and that's kind of weird right away when you've got a veterinarian in Western Iowa talking trading to people all over the world. That's another story. But practiced veterinary medicine, large animal medicine here in my hometown of Coon Rapids, Iowa, which is in western Iowa. We're about halfway between Des Moines and Omaha, about 30 miles north of Interstate 80. When the interest rates went to 20% and our friend Jimmy Carter embargoed all the grain to Russia, the farm economy here fell apart. All the farmers had to sell their cattle to pay the interest, and most of them went out of business eventually. But that immediately killed our veterinary practice. So I've been in partnership for several years with a real nice guy here in town. And we just said, hey, look, one of us can look out the window as easy as two of us. So I sold out to him, and my wife Karen and I, who's standing behind me here, by the way, we decided to raise our 4 boys and a girl on the family farm. And in the process of marketing cattle and corn and soybeans and so on, we got interested in commodity markets, got some charts, got a hold of TradeStation. I taught myself how to program that thing. I've never had any computer programming education or anything in my life, but I just kind of stumbled around with it. That's not the way, by the way. Everybody wants to do that, do it right. I'll tell you how to do it right. I did it the hard way. But in the process of working around with that, I've come up with some interesting things. I've been programming systems, basically concentrating on automated trading systems. I've been doing that since about 95, 96. First presentation on the thing I'm doing now was in 98 in Las Vegas at a TradeStation World. And I just kind of developed from there. I've been all around the world speaking at various conferences, and I've got a book published. I'm trying to get another one done. And, in a couple of minutes, that's my pedigree, I guess.
Cool. So John, talk to us what you're doing. Let's get a little bit more, if you don't mind, a little deeper here. What do you trade currently? Do you you're involved with automated systems? What particular markets do you concentrate on currently?
Oh, George, the one that I concentrate on the most is the Emini SP. I've done a lot of custom programming for a number of individuals for 25 years, and 90% of them want to mess with the stock indices, and the ES is probably the most volatile, and it's got the most, well, it's not the most volatile, the Russell probably is, but the liquidity in the ES will allow about anything, so we don't have to worry about getting market orders filled close to the price and so on. So the ES is kind of the one I've been sharing. Using the most, and the approach I've taken. Now, you guys should be able to see my screen. There are 4 charts here. we'll see a little more activity when the market opens in about, what, 10 minutes or so.
Correct.
The approach I take here is was sponsored, was basically came about when I was looking at various systems that are programming, noticing that the fixed variable systems would tend to need adjusting rather frequently to keep up with the market conditions that were present in the ES and any other market. Now, this will work in any market, any time frame. I've just been concentrating on the ES because that's where the requests are. But you'll notice that even on a daily basis, and as I further get into it, even on the intraday basis, what I call the market personality will change sometimes significantly and sometimes not much at all, but it's a constantly changing thing. And trying to keep a fixed variable system in sync with that ever-changing market got to be almost an impossible task. So what I've done is create what I call a self-optimizing trading strategy. Now, I don't know if anyone else is doing anything like this. The guys at TradeStation say that there isn't. I think there probably are several people doing the same thing, but I've adapted it to TradeStation and through the easy language programming interface. But what I do is the upper left-hand chart right here is actually monitoring in real time, live, 19 more charts. I'll show these to you here in a minute. But effectively what we're doing is using a single system. I call it a global variable self-optimizing strategy. We're monitoring 19 iterations of that same system with different system settings. Now within that system there are 4 variables that create 90% of the trade generation. We use momentum and RSI, just the only 2 indicators I use, but the way to manipulate these is quite a bit different than what anybody else has seen. And I do a 3-day webinar on this, so in just a half an hour we're not going to get into a lot of the details. But it looks at if the momentum is above 0, we call the trend up. If it's below 0, we call the trend down. Then we use a particular configuration of the relative strength index to pinpoint the entry point. It's that simple. But the critical part is the length of those 2 indicators for each particular market scenario that comes up. So rather than trying to sit here and guess at which one of these works, we use one of these. I'll show you these strategies here. I should be able to change this. There we go. This is a 2300 tick system of the ES. Each one of these charts are identical in the fact that we have the same exact system in each one. Now, if you look at the upper left-hand corner, you'll see that where my cursor is going to be here, right here. You can see here where it says ES 2300 Subsystem 1. Down in the lower right-hand corner, it says Subsystem 10. If we go to the next tab over, you're going to see we go all the way up to Subsystem 19. All these are running the same strategy. They're all running a different setup of that same strategy. So effectively what we're doing here, if you want to look at it that way, is diversifying your trading 19 different ways with a single system and a single basic chart, which is in this case a 2300 ES. I've also used a 2 and a 3 and a 5 minute chart for this application. But basically what happens, if we go back here to our base system, the upper left-hand corner, the upper left-hand chart, monitors in real time, monitors live all of these 19 charts. And it will then pick out the one that is doing the best at the current time. And it will change the variables, change the critical system generating variables on the fly in real time and use the best system that's working that day. Of those 19, there's going to be, it could be just have one that works all day. They may all work well all day. None of them may work today. In that case, it won't take any trades because if those charts don't have a positive outcome, we don't trade that day. And it's been real quiet this week, so we haven't had very many trades on the actual system. So it's kind of an interesting way for the market, for the system to keep up with the market. Now, if you'll notice the next chart down, I'll put the cursor over this, the next chart down where it says GV Receive Systems, that's the global variable system. And I'll format this just to give you an idea of what we're doing here. We format this strategy here. This is actually just an indicator. But you'll see that we've got, in the inputs, we've got system, we're pulling data from 19 systems, 1 through 19, the ES 2300 chart, 19 different systems. And then we plot it on this chart. Now, it's not showing anything right now because it won't show anything until the market opens. But depending on how volatile things are this morning, we should see this thing start to populate in about 5-6 minutes. Correct. And it will tell you what the actual P&L is for each one of these charts. Now, this chart we're looking at here, this lower left-hand chart, is just a way for the user to monitor what's going on. The actual stuff all goes on in the background in the program that generates the charts up, the trades up here on the chart. So effectively, we can change this active system that we're using multiple times throughout the day. It's a lot like, and I'm a veterinarian, and I've worked with these things called horses. I think you guys all have probably seen a horse. You've probably seen a horse race. Well, if I'm a jockey, and at 210 pounds, I would not be a good jockey. And at 68 years old, I wouldn't be very nimble anymore. But if I was a young jockey, if I was like Amar, a young athletic guy, I would, and I wanted to win the horse race, I would just jump on the leading horse. As another horse took the lead, I'd jump on that horse. Now, granted, you'd have to have a pretty cooperative group of horses, and you'd have to be pretty athletic yourself. But if you could just jump on and always ride the leading horse, chances are you're going to do better that day if you just stay on the one you started with. Okay. Now, we look at these charts. We look at these various subsystem charts. We'll just look at 1 through 10 here again. One of these is probably going to be the better chart today. One of these 19, I've got 10 on one page, 9 on the other. They all look about the same, but one of those is going to be the chart that's going to do the best today. There may be a number of them that do the same thing, but we don't know. We can stare at this thing till the cows come home, and we do raise cows here, by the way, and I don't know if they're home or not, but if they do come home, it's not going to make any difference because we still can't see which one of these charts is going to be the best today. The system doesn't know that. But effectively, we're letting the system become its own indicator of how to use it itself. The system itself is becoming the indicator to tell us how to set up a system. By monitoring all these live charts and then choosing from the best performing one multiple times throughout the day, we have a better chance of being in sync with the current market than any other approach I've tried to use. Yeah. Now, does this work every day? Is it perfect? Of course not. If I was going to sit here and tell you this thing worked every day, and you'd all turn the thing off because you know darn well there's nothing perfect. And I've been at this long enough to know there's no magic bullet, there's no holy grail. Correct. We can get a little bit closer here than we can otherwise. So basically, in a nutshell, that's kind of what I do. And we'll be able to see it live here in a few minutes when the market opens.
Yeah, no doubt. And look, I think. This is absolutely fascinating. So my question for you is: so if you were sitting with a trader, so let's get into the kind of the micro of it. If you were sitting next to a trader, and the trader's an ES trader, go through with me some of the iteratively when you would let a trader know, or yourself know when to get into a trade, what kind of stops you would be using. Take us through that. Take us through that process a little bit.
Sure. Now, everything in this whole setup is your human involvement is already done. You've got it turned on. The only thing you've got to do here is make sure that everything stays up. It's totally automated. There are seven distinct exits pre-programmed into the strategy. We can scale out. We're entering with 2 lots here, and we can scale out at any number of targets. You can enter with 4 lots and scale out at 3 contracts and let the 4th one be the runner. But everything happens automatically. Now it uses a $150 contract per contract stop. A dead stop, Armageddon stop, because you're going to have losers. You're going to have drawdowns. It's like any other strategy. But it uses a $150 stop. It also has an interesting uh, operation in here that if you get to, in this instance, I've got it set to $850 per day. If you get to an $850 loss on this chart, it's going to shut down and you don't get a trade anymore that day. And the trader can set that at $10. He can set it at 10,000.
Okay.
But you can set that up. Now, there are other exits. You can go to break even. You can. I've got what I call an equity out function in here, to where it's effectively a target. For example, if you set your equity out for 1,000 and set the trader at 250, when your market, when your uh, when your account that day gets to 1,000, then you're going to put a $250 trailing stop on the equity curve. And if it pulls back $250 from any new high equity, you're going to be out and you're going to be done that day. So a lot of most of the stuff is actually automated. So all you got to do is be here and make sure the everything's running, the internet's up, and so on. And so there we go.
So here we are. As we're talking, we do have the markets open now. Let's take a quick check on where we are. The ES now down 6.25 handles at 2089.75. We have crude oil lower by $2.68 at $50.13, and we have the 10-year 2.089. Continued strength in the U.S. dollar at 94.342, up by 0.144. Now, a question for you. Now, do you primarily spend your time monitoring just the intraday, John, or do you, at least from a research perspective, do you go out a few days and take a look at that, or do you primarily just spend it on intraday?
Typically, I concentrate on the intraday. Once again, with all the programming experience I've had with a number of individuals, the day trading thing on the ES short term is what 80% of them want to do, and that's sort of the interest is.
Okay.
I really don't look much at the macro activity at all. Although this thing will work on any market, any time frame, and I'm experimenting with some longer term stuff. But it's basically intraday. Now, if you notice, we got a short position right out of the box here. So the two indicators below tell you what your actual current equity is, plus $50 on a 2-lot.
Okay.
And the equity curve today down here will keep track of all trades today. The top indicator is the current trade.
Okay.
Now, if you look down here, we open up our data window. I'm going to move it up here. We'll notice that, and I'll open this strategy up, this chart. You notice here that system 1, 2, 3 through 19, some of them are trading, some of them aren't. Most of them are up 15, 25, $100 and so forth. But if I spread this out a little bit, you'll be able to see what each individual chart is doing.
Now, John, do you and I want to ask this the right way. Do you optimize which system to use, or can you use all looks like all 24, 25 systems? I mean, is that possible? Or does the system basically generate? Look, we're anticipating system. Looks like system 7, system 4, system 1. Look, you're system 8 at currently at 75 levels. Do you try to optimize that particular system, or do you sometimes do more than one system?
Well, that's an interesting question, George. That's something I probably should have covered earlier. The question is why? Well, answer your question directly. We're monitoring all 19 of these systems, and right now, if you look up here on the top chart, you'll see that we got our entry.
Yes.
I need to change this here. Cursor's giving me trouble. See the -2 up here? Oh, that's showing us we've gone short one lot. But we're using system. I'm not seeing it right here yet. Looks like system. They've all gone lower now. We can go back over here and take a look at the various systems as they're trading. See, most of these have gone short, so pretty much all of them reacted the same way, which is not unusual in the morning. But we're monitoring
Yeah,
all
no,
of
sure.
these.
I mean, you have your, you have your orders on the open certainly coming through the system. That's very normal. Even just from what you're saying, once we kind of get through those initial opening rotations from 9:30, 10:30, we should see a little bit of evening out, if you will, of
Mhm.
the indications. Um,
Right now we're short up here at
Yeah, no, absolutely. No, very interesting. John, I have to ask, I mean, do you, so this is purely technical, obviously you're using, market internals. As, you as a trader and being around for quite some time, in your own mind, John, what else do you look at in addition to this information? Anything that's more of a macro question? Anything else that you look at in addition to your technical indicators there?
no, George. This is it. You've seen the whole 9 yards here because
Okay, great.
we're looking at uh, and I guess I should preface that by saying after doing this for 25, well, actually 28 years,
Sure.
and programming systems for everybody from Main Street to Wall Street, literally,
Cool.
uh, and doing hundreds, if not thousands, of systems, you'll find very often, very frequently, infrequently, can you say always or never. But I can
Yeah,
come as close to saying always on this comment that always the simpler system is by far and away the more effective and the most profitable. I've done
absolutely,
systems that are pages and pages and pages of code, and they're absolutely worthless. This
absolutely.
thing looks at two indicators. That's all I'm looking at is two indicators, and the simpler you keep it, the more effective it is. And
Sure.
I just look at momentum and RSI, and I do a lot of optimizations and so on, but that's it.
Yeah, no, John, we totally agree with you. Being both a well, I guess all three, capital markets participant and engineer and a technologist, I absolutely agree with you wholeheartedly. Where the simpler systems are the better ones, and certainly, it's not a hard thing to enter more variables into the equation, but the reality is, it's just from a calculus perspective, certainly it increases the complexity exponentially, if you will, as you're putting in more variables. So I totally agree with you. Absolutely. John, um, we've had significant volatility in January. From your experience, going a little bit more macro, do you anticipate volatility to continue into 2015? We like to ask this of our guests, as our listeners. Some of them are professional, some of them are, very, very new to the environment. Uh, Give us your take on where you're seeing the kind of a macro view on things.
I think we're going to have a lot of volatility coming up. You mentioned earlier in your broadcast here was very interesting coverage of all the fundamentals going on. And while I don't concentrate on any of this from a trading standpoint, of course, I'm observant of what's going on in the world, and I can't see but what a lot of this stuff is going to continue to happen. We're going to
Yeah,
have
no doubt.
geopolitics and the possibility of more conflicts in the Mideast and the
Right.
Fed adjustments that are going to happen. We're eventually going to have to raise interest rates. We're going to have to eventually look down that tube, and
Sure.
uh, there's a lot of things going on, and typically we see kind of a quieting down of volatility over the holidays in the first
Right.
week or two in January. But from now for the next 3 or 4 months, it's going to be pretty wild. And it's been quiet this week. It's been quiet this week to where the systems haven't traded very much because we don't. If we get a little volatility or none of these systems are positive, we don't trade them. But uh,
Absolutely. No,
seasonally, I think we're looking at more volatility, and fundamentally, absolutely.
no doubt, no doubt, John. John, thank you very much. This has absolutely been great. We'd love to have you on again, and really, perhaps next time dive it a little bit deeper and what else you're seeing in the markets. Um, as we're coming away here, we certainly see your screen. You know, the gyrations in your indicators there. I think that's great. What can we anticipate, at least in the next few days to a week or so, in terms of the markets? Anything that's on the horizon for you that you are keeping an eye on?
Typically, I keep a lot shorter horizon. I don't look out much more than about um, half a day or a day, and I
Okay,
let
fair
the
enough.
indicators do the talking. Now, all the one thing, and as an engineer and as a fundamental analyst yourself, you'll agree that uh, everything fundamental comes up will eventually be reflected in a price chart.
Absolutely,
So I guess I'm
absolutely.
lazy. In fact, I just look at the charts, and let the rest of you guys worry about what fundamentals are doing and watch the
Absolutely.
charts.
Yeah, no, we'll
Yeah,
continue to bring up fundamental situations
sure.
on a daily basis. John, thank you so much for joining us. It's been an absolute pleasure. We hope to have you on again, folks. John Clayburg on Unusual Activity. John, thank you so much for joining us. We wish you a great day and a prosperous day as well.
Thank you. Be glad to participate anytime. Thank you.
Thank you so much, John. Folks, John Clayburg on Unusual Activity. Thank you, folks, for joining us. Let's take a check on the markets this morning. We have the ES lower by 6.25 points at 2089.25. We have crude oil still depressed this morning. Again, we're anticipating numbers at this morning at 11 o'clock for petroleum 1034 for the natural gas. Natural gas currently lower now by 0.005 at 2.826, 2.828 specifically. We in the Northeast, anecdotally, we are anticipating rather significant polar vortex in terms of rather frigid weather is coming in, and the Northeast does tend to be rather large demand population for both heating oil and natural gas. So again, interesting dynamics there. 10-year at 2.082, excuse me, 2.082. We have the 30-year at 2.710. So again, continuing that, and we have the dollar higher at 94.307, and the euro now higher, was earlier lower, excuse me, currently at 1.1387. Folks, thanks for joining us on Unusual Activity, powered by FinancialJuice.com with George Avedon and Milton Marmonides. Special guest, John Clayburg. Folks, have a great day. Thank you for joining us. Good hunting.